Hello learners, welcome to C.A.S.H. Today we will understand what is balance sheet and why it is prepared, and also why it is prepared on a particular date. So let's begin. Balance sheet is a financial statement that shows the financial position of a business at a specific date. Why it has to be balanced? Because it is an equation that says asset is equal to liability plus equity. Every asset in the balance sheet has a source of finance. Total assets must equal the total source of finance, that is equity and liability. That is, equity means owner's fund, liability means outsider fund. That's why a balance sheet must balance. Then why it is prepared? It is prepared to show worth of the business, to help investors, bankers, or government to make decisions, to show financial strength and weakness of the company or the business, to show how funds are raised and utilized. Now let's understand the balance sheet concept with a beautiful example. Mr. A and Mr. B are close friends. Mr. B has computer knowledge but don't has money to buy computer or laptop. Now Mr. B approaches Mr. A and asks him rupees 1 lakh to purchase a laptop and build his skill. Mr. A agreed and given a loan of rupees 1 lakh, and he said, you don't have to pay any interest but repay me whenever you earn some money. Now, one day, Mr. B is working at his home. One of his friend, Mr. C, visited B's home and asked, what are you doing? Mr. B replied that I am programming and earning with this laptop. C said, who funded this laptop? Mr. A funded 1 lakh rupee. Is this laptop worth 1 lakh rupee? No. I purchased it for only 50,000. Where is the remaining 50,000? I have invested in bank FD because if I can't earn with my skills, let the money earn on its own so that I can repay Mr. A. How much you have earned so far? B said. Around 30,000 by programming and 2,000 from FD. How much you have returned to Mr. A? Till today, I paid 20,000 and balance 80,000 yet to be paid. Now, Mr. C left by telling, I will visit you another day. One of Mr. B's friend, after C left, visits Mr. B house and asked the same set of questions, and Mr. B replied same set of answers. Now it repeated with 3 more friends. Mr. B got frustrated and roughly prepared this statement in a sheet of paper. He prepared 2 columns, and in one column he said, these are the funds I received from, and these are the fund I used to. He received 1 lakh from Mr. A and has repaid 20,000. With this 1 lakh, he has purchased 50,000 worth of laptop and balance 50,000 invested in bank FD. Now, where did he get this 32,000? Since he bought that laptop for programming, and with that programming skill, he earned 30,000 income. And as he invested 50,000 in FD, he earned 2,000 as interest. Now, for laptop repairs, he has paid 5,000. So he prepared another sheet with these things and said, these are my expenses and these are my earnings. Now, his total net earnings is 27,000. Whoever asks him, what is your net earnings? He will say this. Since Mr. A told, repay me whenever you earn, he paid 20,000 to Mr. A for loan repayment and paid this 5,000 for laptop repairs. Now he has rupees 7,000 cash with his hand. He is showing this 27,000 here because if anyone asks him what is your net earnings, he will reply with this amount. From now on, whoever disturb Mr. B, he will reply with this statement saying, this is my current financial position. So this is the reason we prepare balance sheet. When we connect it with the company prepare balance sheet for the same purpose, but here not for his friends, but for everyone who asks what is this company is doing. Like for example, investors, public, government, bank, etc. So it prepare a statement which is financial statement that shows the financial position of that business at a specific date. Now let's understand why balance sheet is prepared as on particular date. Because it shows the financial position at a specific moment. It is like a snapshot of the business. Let's understand with an example. Imagine there is an investor, Mr. X, who is very rich and want to invest his money in a company where it has no loans. And he found one such company on 10th of April 2025. But due to some personal reason, he said, I will invest on 17th of April 2025. Between these days, company wanted emergency fund. So it approached bank, and bank, after verifying all the paperwork, it sanctioned the loan and deposited the money in company's current account on 13th 4 2025. Now company has obligation to repay the money to bank, that is loan. Now on this day, Mr. X arrives to invest, and he only remembers last week's balance sheet. He still thinks the company has no loan as of today. If he doesn't check the new balance sheet as on this date, then he will still think the company is debt free and may invest blindly. But if we look into the balance sheet on this date, then his decision may change. He may find the company as riskier one. That's why it is like a snapshot of the business. If that particular date is missing, you will never know which reality you are looking at. So the balance sheet is prepared as on particular date because assets and liabilities keep changing and investor must see the latest financial truth. If you understood this clearly, comment balance sheet is a snapshot. Now you know why the balance sheet is prepared and why it is prepared as on particular date. In next video, we will discuss how to prepare balance sheet. If you are loving how simple accounting feels now, make sure to like, share and subscribe because we are on a mission to make commerce easy for everyone. See you in the next video. Keep learning, keep growing. Thank you.